Okay. Well, first of all, absolutely right. We're quite clearly net vendors for the foreseeable time. So also for the next couple of years, we will be net vendors. So our main interest at the moment is also really to see how does liquidity evolve in the markets that have not seen so much liquidity in the last few years and recent months. So we do see, you're quite right, we see a lot of interest in the core markets, both from partly in France, that's the case, from people arriving new and looking opportunistically, but clearly from a wide source of other buyers. But we also see a lot more interest in the more peripheral markets, Central Europe. For instance, and there is certainly more liquidity evolving. We see also a lot more happening on the leasing side. So what we talked about in France, where the whole leasing is lagging behind, we see a pickup in some of the markets that have been having it harder to catch up and get started again. And that kind of pickup in leasing activity certainly is the kind of the base for successful, also opportunistic re-entry into those markets, and that's happening at the moment. So there's a lot more going on in general. I think for the more core markets, again from a point of view of a vendor as well, and also for France, we have to say there's such a huge range of people that have an interest in real estate that the whole discussion about short-term, even medium-term outlook on France, for instance, in my view, often takes a bit of a step back because there's so many other people out there that have a completely different rationale, that have a very long-term look. And I mean, Alfred, you talked about risk. Risk is always a relative perspective, and I think the fact that people are looking to invest in Europe and also in France is not going to be led by who is currently President de la République and is he doing well or not, and it's more going to be led by, do I want to be in Europe, and if I'm in Europe, do I want to be in a very core and liquid market, and so there's so many rationales out there that I think we shouldn't be sidetracked too much by just our current situation. In terms of new investments, I mean, we are also led by the pickup in some of the more core plus markets, where we can see there are both still got opportunities out there to buy, and they can also be supported by a stronger occupational market.